Imagine it's 2008. The financial world is crumbling. Major banks are collapsing and unemployment is skyrocketing. While most businesses are fighting for survival, a small cleaning company in Ohio is doubling their revenue. A veterinary clinic in Texas is expanding to a second location. And a discount grocery store in Michigan is opening 3 new branches. What did these businesses know that others didn't? They understood something fundamental about human nature and economics. Even when people lose their jobs, cut their budgets, and cancel their vacations, certain needs never disappear. Today, as we face mounting economic uncertainty, with global growth projected at just 2.3% for 2025, the slowest since 2008, and Goldman Sachs estimating a 20% chance of recession in the next 12 months. Understanding recession-proof businesses isn't just academic curiosity, it's survival. Before we dive into the 7 businesses that thrive when everything else fails, let's understand what makes a business truly recession-proof. It's not about having a crystal ball or being lucky. It's about serving human needs so fundamental that economic downturns can't eliminate them. Think of Maslow's hierarchy of needs applied to business. At the bottom, you have the absolute essentials: health, food, shelter, maintenance, safety. These don't disappear during recessions. They often become more important. The data backs this up. During the Great Recession of 2008 to 2009, while the overall market declined 38.5%, certain sectors barely flinched. Healthcare stocks fell only 23%. Grocery spending actually increased as people cooked more at home. Auto repair shops saw steady business as people kept their cars longer. These weren't coincidences. They were predictable patterns based on human psychology and economic necessity. Unfortunately, when someone has a heart attack, they don't check their bank account first. When a child breaks their arm, parents don't wait for better economic times. Health is non-negotiable, making healthcare the most resilient industry during any economic downturn. The numbers tell a compelling story. During the Great Recession, while other sectors shed millions of jobs, healthcare employment actually increased. Why? Because people get sick regardless of economic conditions. In fact, recessions often increase demand for certain medical services. Stress-related health problems spike during economic uncertainty. Mental health services see increased demand. And here's something counterintuitive. A 10-point increase in local unemployment correlates with a 1.27% increase in healthcare's share of employment. But healthcare isn't just about traditional medicine anymore. The pandemic accelerated telemedicine adoption by decades. Digital health investment reached a record $14.1 billion in 2020. Home healthcare services are booming as the population ages. By 2030, 21% of Americans will be over 65. Elder care and assisted living facilities can't keep up with demand from the baby boomer generation. The subsectors within healthcare offer varying entry points for entrepreneurs. Home healthcare services require less capital than opening a hospital, but still serve essential needs. Mental health services have seen explosive growth, with telehealth therapy platforms connecting providers with patients nationwide. Medical equipment supply businesses serve the backbone of healthcare delivery. Even healthcare administration, the unsexy world of billing, coding, and insurance services, remains essential as the industry grows more complex. Starting a healthcare business does come with challenges. Barriers to entry are high due to licensing requirements, certifications, and regulatory compliance. You need substantial capital for medical equipment, facilities, insurance, and qualified staff. But once established, these businesses demonstrate remarkable resilience. They're serving needs that exist in good times and bad, supported by an aging population and advancing technology. Food is the most basic human need. During recessions, the food industry doesn't just survive, certain segments actually thrive. During the Great Recession, while restaurant spending dropped 11.5%, grocery spending increased. Families shifted from eating out to cooking at home, driving grocery sales from $3,417 to $3,526 per household between 2007 and 2008-2009. This wasn't just about saving money. It was about maximizing value when every dollar counted. Recession shopping patterns reveal clear winners in the food space. Consumers flock to discount retailers like Walmart, Aldi, and Costco. They switch from name brands to private label products. Coupon usage skyrockets. Bulk purchasing and warehouse club memberships increase. This creates opportunities across the food ecosystem. Discount grocery stores position themselves perfectly for economic downturns. Specialty diet foods, organic, gluten-free, health-focused, maintain loyal customers even during tough times. Food trucks offer restaurant experiences at lower prices with minimal overhead. Community-supported agriculture represents an interesting niche. Direct farm-to-consumer relationships that bypass traditional retail markups. The barriers to entry vary significantly across food businesses. A food truck requires less capital than a grocery store, but both need food safety permits and health department compliance. Inventory management becomes crucial. You need reliable suppliers and efficient logistics to maintain profitability. The scalability depends on your model. Delivery services can expand rapidly, while physical stores are limited by geography and storage capacity. When times get tough, people don't buy new cars. They fix the ones they have. This simple truth makes auto repair and maintenance one of the most reliable, recession-proof businesses. During the COVID-19 pandemic, new vehicle sales dropped 34%, but auto repair shops maintained steady business as people extended their vehicle ownership. The average age of vehicles on American roads has been steadily increasing, hitting record highs during recent economic uncertainty. This trend creates sustained demand for repair services. When someone's car won't start, they need it fixed immediately for their job, their children's school, their grocery shopping all depend on transportation. These aren't discretionary expenses that can be postponed. Consumer behavior during recessions strongly favors repair over replacement. The auto repair industry offers multiple entry points for entrepreneurs. General repair shops provide full-service mechanical repairs for all makes and models. Quick lube and oil change services focus on routine maintenance that every vehicle needs. Tire services include sales, installation, balancing, and rotation, all essential for vehicle safety. Auto parts retail serves the growing do-it-yourself repair market as people tackle simpler maintenance themselves. Mobile mechanics represent a growing segment, bringing repair services directly to customers. This model reduces overhead costs while offering convenience that busy people value. Specialty services like transmission repair, brake service, or air conditioning create niche markets with less competition. Starting an auto repair business requires moderate investment, typically $10,000 to $50,000 for diagnostic equipment, tools, and initial setup. SE certifications add credibility, and specialized knowledge commands premium pricing. Cleanliness is essential for health, safety, and business operations. The COVID-19 pandemic permanently elevated awareness of sanitation, creating sustained demand for professional cleaning services. Contract cleaning services are forecasted to grow over 6% annually through 2027. This growth reflects several converging trends. Businesses cannot compromise on cleanliness, even during economic downturns. Commercial clients maintain cleaning contracts because employee health directly impacts productivity. Residential demand remains stable as dual-income households prioritize time over money, choosing to pay for cleaning rather than sacrifice limited personal time. The cleaning industry was designated essential during COVID-19 lockdowns, demonstrating its critical role in maintaining functioning societies. This designation reflected what many business owners already knew. Cleaning services provide predictable, recurring revenue through long-term contracts that survive economic uncertainty. Different segments offer varying opportunities. Commercial office cleaning provides regular contract-based income with predictable schedules. Residential house cleaning creates recurring revenue through weekly or bi-weekly services. Specialized sanitization services command premium pricing for medical-grade disinfection. Post-construction cleanup serves new construction and renovation projects. Medical facility cleaning requires specialized training but offers stable, well-paying contracts. Industrial cleaning serves manufacturing and warehouse facilities that operate regardless of economic conditions. Window cleaning for commercial and high-rise buildings provides specialized services with limited competition. The barriers to entry are relatively low. Basic equipment and supplies cost under $5,000 to start. However, success requires insurance, bonding, and building client trust. The scalability is exceptional. Once you establish efficient systems, adding clients and expanding geographically becomes straightforward. Most importantly, the recurring revenue model provides stability during economic uncertainty. Your roof starts leaking during a recession. Do you wait for better economic times to fix it? Of course not. Essential home repairs cannot be postponed, making this industry remarkably recession-resistant. According to Lowe's CEO, 2/3 of home improvement spending is non-discretionary, meaning it happens regardless of economic conditions. During recessions, homeowners actually increase spending on repairs and maintenance for a counterintuitive reason. They repair existing homes rather than moving. When housing markets slow and people can't sell their homes easily, they invest in maintaining and improving what they have. Emergency repairs, burst pipes, electrical failures, heating and cooling breakdowns continue regardless of economic conditions. Various subsectors serve different needs. Plumbing services handle both emergency and routine repairs. Water damage waits for no one. Electrical contractors address safety upgrades and repair work that requires professional certification. HVAC services maintain heating and cooling systems essential for comfortable living. Roofing contractors handle leak repairs and preventive maintenance to protect the entire structure. General handyman services aggregate multiple small repair needs, often serving as the first point of contact for homeowners. Emergency repair services that offer 24/7 response command premium pricing for urgent situations. Property management companies need comprehensive maintenance services for their rental portfolios. Starting a home repair business requires moderate investment, typically $10,000 to $50,000 for tools, work vehicle, insurance and licensing. Most trades require professional licensing, insurance and bonding, creating barriers that also limit competition. The work is local by nature, building community relationships that generate referrals and repeat business. Technical expertise and problem-solving abilities differentiate successful contractors from less skilled competitors.